Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and today we are going to talk about everything we could expect to see this upcoming week within the markets. And myself, I am super excited for this week in trading because this last week was super bloody, and I feel that we got a major catalyst that shows that the markets will push forward, but most investors missed it. We'll get to that in a second, but first, just looking at the technical analysis, I have the S&P, the SPY on the left, and then the NASDAQ, the triple Qs on the right. And as we could see, of course, this last week was a very bloody week, but the week before that and leading up to that, we did see some massive gap ups. So the markets were gapping up off of the macro news of the Federal Reserve cutting rates in October. But this last week, we did see this severe sell-off. We did see ourselves go back down to the 50-day moving average on both of the major indexes, and a lot of stocks, of course, were also selling off. Now, in the positive sense, on Friday, we did see a bullish hammer to finish the day, showing that the bulls did take control of the market on Friday. Now, we'll have to see if those bulls do continue to push up the markets on Monday and this week, but a positive sign that Friday was such a bullish day and the bulls did finish the day. So with that, the major news that I feel that most investors were misled with was all around Michael Burry and his shorts on Nvidia and Palantir. So a 13F filing came out. It showed that Michael Burry is shorting both of these major companies, and what really upset me about this sell-off this last week wasn't even the actual sell-off itself, but how all the major news networks and just a lot of financial media was only reporting on this. The whole news was all Michael Burry, Michael Burry, Michael Burry, and this just upset me because what is this, like 2021 with Elon Musk and Dogecoin? This is ridiculous. One man cannot cause the markets to crash like this, even with such a big short. To me, this isn't misinformation, but it was just misleading information. Yes, it is a fact that he has shorted these companies, but this is not the reason why the markets went down. The markets really went down because of a liquidity crisis with the banks. And guess what? The Federal Reserve stepped in by allegedly pumping $29.4 billion into the U.S. banking system. So the banks having some problems with liquidity, likely because of the government shutdown that we are seeing. We are not seeing the federal government pay out, so these banks not getting as much liquidity as they normally have. The Federal Reserve stepping in. To me, this is a big catalyst for the markets, and to me, when we just look at historical data, this shows right here to me why the markets are going to go a lot higher. This is why this weekend I have been so bullish and so excited. I've been listening to music, I have been dancing, I have just been having a great time, because when we do look at historical data, first it is important to talk about the Federal Reserve and when the Fed was actually created. I do plan here in the future on making a whole video about the Federal Reserve and the history of the Federal Reserve, because it is so important to know what the Fed's policy is and whether or not they are pumping liquidity in, whether or not they are increasing interest rates or lowering it, because the Federal Reserve controls the money supply. And so the Federal Reserve was created in 1913, and not everybody was for this. This is just a little bit of a conspiracy theory, but the Federal Reserve was created in 1913, and this happened right after the Titanic, which had some of the richest individuals in America go on this cruise. A lot of these individuals were opposing the Federal Reserve. So the Federal Reserve by some can be seen as the most evil organization, because really what their monetary policy is, that really affects the whole world. The markets, it affects the stock market, affects the housing market, it affects inflation, it affects the strength of the US dollar. And so the Federal Reserve was created in 1913, and a bit of historical data that many may not know is the Great Depression really did start from the Federal Reserve, because leading up to 1929 with the stock stock market, there was a lot of hyper bullish speculation. All assets were rising. This is why they called it the Roaring 20s. And then the Federal Reserve said, no, we do not want that. So what did they do? Well, they raised rates from 3.5% to 6%, and it slowed down the stock market speculation. And so they made borrowing expensive, drying up easy credit that had fueled the stock bubble. And so the difference from today and from then is, first off, with that market crash, that was because the Federal Reserve increased the rates. Right now, we are seeing rates lowered. So that is a difference from 1929. And then also what the banks just did, very different from what happened during the Great Depression. And this is really why I am so bullish right now. And this is where I think a lot of investors missed this big catalyst, because the banks all collapsed when the Fed failed to inject liquidity into the banking system. So we saw all these different banks fail back in 1930. We know the historic bank runs. Well, the Federal Reserve could have prevented all of that. Had they not increased interest rates, we would have seen these stocks continue to fly. And had they injected liquidity into the banks, we wouldn't have seen the collapse that did ensue after that. So now when we look at what is currently happening, things are so different. The Federal Reserve right now is in a larger cycle of quantitative easing. They just provided liquidity to the banks. And to me, this just confirms in my mind that the Federal Reserve is going to be our friend, and that, again, we should not fight the Fed because their monetary policy is so different than that time frame. So for all the bears saying that the markets have to crash, I believe that they are wrong and not really looking at the monetary policy. So going into December right now, there is a 66% projection that the Fed once again does cut rates, but I believe it is truly a lot higher than this because the Fed just did provide liquidity, and I believe that we are going into a much larger cycle of quantitative easing. So such a different time period than 1913. The Fed is acting so different. And then when we do look at the economic news this week, we are supposed to have numbers around inflation on Thursday, and Friday we have CPI numbers on Thursday, and then Friday we have PPI numbers. So the preferred measurements of inflation for the Fed, I do believe that the government shutdown will continue past Friday and that these numbers will be delayed once again because the Bureau of Labor Statistics right now not releasing data with this government shutdown. And Jerome Powell, the most powerful man in the universe, the government doesn't want to give him over any data and to at all change the reason for Jerome Powell to not cut rates or even rise rates if things were crazy enough, which I don't believe he would do because Jerome Powell knows the implications that would come with rising rates right now. The whole world really depends on this monetary policy. So myself, I am very bullish on the markets for this next week and for the entire rest of the year. So the markets still could be a bit choppy this week. I would still advise with caution, but we are seeing a lot of buying opportunities. As I have recently been talking about on this channel, there are a lot of stocks that I have been trading with while markets have been elevated. But now that we've seen such a nice healthy pullback, I am going to be looking at investing into some plays for the long term once again. So I do want to say I am super bullish on the markets right now. I am super bullish going into Q4 again because of the monetary policy. When we know the history of the monetary policy and what the Federal Reserve is doing right now, they really have already shown their hands, showing that they will not allow the markets to fail. But in the short term, just this next week, there could still be some choppy movements, some more issues with liquidity. We could see some more plays sell off or even go a bit sideways, but that is okay with me because we have already seen such a broad sell-off, and these are the investments that I am going to be making for the long term. So the first play I'm looking at here is advanced micro devices. I consider this to be a great growth opportunity that also has a lot of volatility and a lot of buying pressure on it. AMD has a lot of investors interested in this company right now. We recently saw some very hyper bullish momentum until this last week, and AMD actually had a very positive earnings report. report. They came out with earnings on Tuesday. They did beat expectations. They came in with their largest quarterly ever when it comes to revenue, and they also did come out with some great guidance going forward, but none of that mattered with the liquidity issue that we saw last week. So AMD, just like the rest of the market, had a bit of a sell-off, but that is completely okay with me because I am looking at this play for the long term. So we did drop down. We did fill this gap right here. We are now at the 51 mark on the relative strength index. We did recently see a bearish cross on the MACD. So what I am hoping for AMD is either for us to continue to chop sideways or, of course, see bullish momentum towards the upside. But there is always the chance that we do drop a little bit, maybe back down to the level of 200, because again, I am super bullish on the markets, but there could always be a little bit more of liquidity issues this week. But that is okay with me because as a long-term investor, even if these plays do dip more, I know that right now I am buying at a great opportunity after we have already seen some sell-off, and the government shutdown should work as a major catalyst. The government reopening should work as a major catalyst for the markets. I do expect for when the government does reopen for the markets to have a big pop up. So I want to invest into the fear, uncertainty, and doubt. When there is blood in the streets, that is the best time to invest. So I am looking at AMD Advanced Micro Devices. AMD also has a beta of 2, which means it runs at about double the speed of the market. Beta basically just representing the speed. Being at 1, you could look at it being like the Dow Jones Industrial or the SPY. So anytime you see an elevated beta, that means it's a high beta play, and it does tend to run a lot quicker. There is more volatility. So I'm looking at Advanced Micro Devices. I am looking at another play that also has a beta of 2. That is Robinhood stock, which recently did have a little bit of a sell-off, just like the rest of the markets this last week, but still holding in this upwards bullish trend. So all year long, we have had a rising level of support and resistance with Robinhood. We are right at that level of support. We are right at the relative strength index sitting just below 50, and on the MACD, we were rejected on the bullish cross up, but we are pretty low on the MACD. Robinhood, another stock that released earnings this last week, and they absolutely killed it. Their earnings were fantastic. So just remember, a liquidity issue is what dropped the markets this last week, not Michael Burry, not because we are in an AI bubble. So Robinhood has so much intrinsic value. Another play that has a beta of 2, and Robinhood just at this level of rising support. I do expect a bounce up, but again, the markets could do anything this week. I don't have a crystal ball. I don't claim to. What I could see in Robinhood is some sideways movement on this level of support, but that is completely okay with me because with Robinhood, I believe so much in this play. Their last quarterly showed that this company is continuing to grow, and they have had so much innovation this last year. So I cannot say enough good things about Robinhood. This is another play that I am looking at to make more long-term investments into. The next 2 plays are both going to be around cryptocurrency, MicroStrategy, and BitMine immersion. And MSTR right now is at a major level of support. We have seen a lot of bleeding with MicroStrategy, or now known as Strategy. We are under the 200-day moving average on Strategy. We are very low on the relative strength index, and we are also very low on the MACD. And of course, MicroStrategy very correlated with Bitcoin. And when we do look at Bitcoin, right now on the technical analysis, we are slightly under the 200-day moving average. We are very low on the relative strength index and very low on the MACD. And Bitcoin and all of cryptocurrency and all risk assets so heavily influenced by what the Federal Reserve does. Right now, the Fed is cutting rates. They are pumping liquidity into the markets, and they are turning on that money printer. So I do expect for Bitcoin to have a bullish cross here soon enough enough to get back above the 200-day moving average. And currently, while we are sitting at $104,000 in Bitcoin, I consider this to be a very low price for Bitcoin. And before we know it, Bitcoin is going to be back at higher levels, and the fear of missing out is going to kick in once again. So if you are investing or trading into the markets, it is always best to invest when others are fearful, when there is a lot of fear, uncertainty, and doubt in the air, and not fear of missing out. So MicroStrategy, basically a leveraged asset on Bitcoin. There has been so much bleeding this last year, a lot of pressure on MSTR, and I do expect to have another bounce in MSTR as well as Bitmine immersion. So MSTR has the one of the largest holdings of Bitcoin in the world. BMNR has the largest holdings of Ethereum in the world. And with Bitmine immersion, we have been in this sideways channel basically since August. We are at a low spot on the relative strength index, low on the MACD, and we are right at this level of support on this sideways trend with BMNR. So I do expect another bounce to happen in BMNR, and this is a long-term investment for me. BMNR sitting at just $40. I consider this to be a great buying opportunity. And again, when we compare it to MSTR, which is on Bitcoin, MSTR has had quite the wealthy past despite the sell-off that we have seen most recently. BMNR, Bitmine immersion, a Ethereum holdings, relatively new to the game. So there is still a lot of opportunity to get into BMNR before the masses get in, because right now we are seeing fear, uncertainty, and doubt. And in the near future, I believe it's all going to be fear of missing out, just like this next play that we're going to talk about, which right now does have a lot of fear, uncertainty, and doubt within it. But I believe the fear of missing out is going to get crazy here in the near future, and that is DJT, Trump Media and Technology Group. And I thank all of you who are loyal investors to this channel who have been following me with DJT. I got a lot of requests this last weekend from a lot who wanted me to cover DJT. So I thank you all for your support with DJT. In the short term, things have been decently rough. We were in this level of sideways consolidation, and we did recently break under it. And with DJT, this is one of my long-term investments. I have been holding DJT since last September. I have an average price of $12.75. DJT was actually the first company I ever talked about on this channel, and it has been a wild ride, because with DJT we got to highs all the way up to $50, and then it has just been a bleed since the elections. We did get a bit of a pop around the inauguration, but we have bled since that point. And for me, I've been holding this since $12.75. So at one point I saw a more than 200% return on investment within this play, and now I am up just 3% on those long-term shares. But that is absolutely okay with me. I made that investment last year, and as I have said this entire time, I am holding these shares for the entire term of Trump's presidency. So this does not scare me at all. I consider this to be a tremendous buying opportunity, because when I made my initial investment in DJT all the way last year, this company was not nearly as developed as much as it is now. So since that point, since Trump got into office, this company has done so much when it comes to their financials, when it comes to cryptocurrency. They opened up a $2 billion reserve within Bitcoin, and they are also set to release a ton of crypto ETFs coming here very soon. So all of these developments have happened this last year, but the results just aren't showing up yet on their balance sheet. Right now, Bitcoin and the entire crypto market under a bit of a bear market, as well as a lot of these crypto treasury plays and crypto reserve plays. DJT, a big crypto play, also currently beat down with a lot of these other plays. Right now, sitting low on the candlestick chart, sitting low on the relative strength index, and also on the MACD. But all of this is positive to me, because again, when I invested all the way back here, I did not even know what what this company would do with cryptocurrency. And so right now, sitting at just $13, I do consider this to be a tremendous buying opportunity. This company also did release their earnings recently. They came in with a Q2 revenue of just $883,000, so relatively low. But with DJT, this company has a $3.7 billion market cap, so still a large market cap. And we got to ask ourselves, if this company is having such low quarters of revenue, then why is there still so much money invested into DJT? Well, that is because there are a lot of powerful people and institutions that are invested into this company, a lot of politicians, and also the Trump family. They hold about 50% of the flow in DJT, so they all want to see this succeed. And I believe that we are getting closer and closer every single day. We are getting closer and closer to having Bitcoin rise once again and the entire crypto market to have another big push up. But in the short term, there have been a lot of liquidations with cryptocurrency, and there's been a lot of fear, uncertainty, and doubt in the air. As soon as that flips, I do believe that DJT will flip with the rest of the crypto market. Now to get into our last play of the day, QBTS, and the entire quantum sector has been seeing some rough movements. Most recently, we went from being at highs of $46 on QBTS and now sitting at $30. So right now, just to get back to that all-time high in QBTS, that would be about a $16 movement. When we do look at the relative strength index, we are right at the 50 spot there. And on the MACD, we have seen so much bleeding that I do believe that we should be seeing a bullish reversal here soon enough. And with the Federal Reserve, our thesis on this channel, and just to go with everything we have said this entire video, the Fed is our friend, and they are stepping in to ensure that the markets will not fail. And when that does happen, when the Fed does continue to pump more liquidity, and when they do continue to cut rates, and when the markets really do spark very bullish again, this will be best for risk assets. So in the short term, all these risk assets have had a pretty hard sell-off, but when things get a bit more bullish, like right now we are still on this upwards bullish trend, so it feels crazy to even say this, but when things do spark more bullish again, when the fear, uncertainty, and doubt dies down, all these risk assets are going to pump once again. And I could definitely see QBTS getting back to all-time highs, as well as all these other quantum assets. A lot of true intrinsic value within this sector, as well as all the companies that we talked about today. So I would be curious again to hear what you all think in the comment section below. Please let me know what you think of the recent events and news that we have gotten within the markets. Also, please leave a like and please subscribe to the channel if you haven't already done so. I thank you all so much as always for being here, and I will see you in tomorrow's daily talk of stock.